Hi guys, this is Cheryl. This is homework problem, chapter 10, number 13, and it's pretty straightforward, but the problem states Blossom Company issued $510,000 of 8% 20-year bonds on January 1st, 2017 at face value. Interest is payable annually on January 1st. So the first part, it says prepare the journal entry to record the issuance of the bonds. So pretty straightforward. On January 1st, we are debiting cash for $510,000, which is the face value, what the bond is at face value. And then we're crediting bonds payable for $510,000. Pretty straightforward on that one. The next one is prepare the journal entry to record the accrual of interest on December 31st, 2017. Now we have to remember the interest formula, which is face value of the bond times the annual interest rate times the times in terms of 1 year, and that will come up to our interest. In our problem, we have $510,000 times 0.08 times 12 over 12 because we're recording it at the end of 2017. And we come up with an interest of $40,800. And so on December 31st, 2017, we debit our interest expense and credit our interest payable. And then our next part, it says prepare the journal entry to record the payment of interest on January 1st, 2018. And as you remember up here, interest is payable annually on January 1st. So basically now we're just paying the interest that we recorded up here in Part B. So we debit our interest payable for $40,800 and we credit our cash for $40,800. And the last part is prepare the journal entry to record the redemption of the bonds at maturity, assuming interest for the last interest period has been paid and recorded. So we look up here, when it matures, it's at 20 years. So we're at 2017, so in 20 years, we're recording this bond January 1st, 2037. And we're debiting our bonds payable because we're paying it off at $510,000 and crediting cash for $510,000. I hope I didn't confuse you. If you have any questions, please let me know. And thank you.